Blessings, family. Jay Herring here, your personal licensed life investment specialist, answering questions, busting myths, and protecting families. That's what I do. All right, so today we're busting another myth. All right, and that myth is life insurance only helps me after I die. So why would I get it? I don't care what happens after I die. If that's you, then this is for you. All right, this is a myth. And I feel like this is a myth that has probably kept the most people from getting life insurance that actually needed it, that it actually could help, whose families it could actually benefit. All right. So why is this a misconception? All right. I think the misconception comes from just the confusion and not knowing exactly the ins and outs of the two main types of insurance, which are term life insurance and whole life insurance. All right, that's what the 42 types of life insurance break down to. They can be classified as a type of term or a type of whole, typically. All right, so first we got term insurance. All right, term insurance is going to only pay out when you die. All right. And you have to die on a schedule. You have to die during that term for that policy to pay out face value. All right. So this is probably the first place that a lot of this misconception comes from. Just thinking that this is the only option, this is the only thing I've heard of, it's the only type of insurance I know about. I know it only pays out if I die. So I ain't got no kids. I don't need it. Right. Okay. So in that case, that could be true if that's all you have. But there's other options. All right. So second, we have whole life insurance. All right. Now, whole life insurance. A few things about it that make it special, make it exclusive. It builds cash value. Term doesn't do that. All right. It always pays out. All right. Term pays out 1 to 3% of the time because you have to die during that term of your policy. All right. Whole life insurance pays out 100% of the time. All right. It builds compounding interest. All right. At a 4 to 5% interest rate compounds every year. It's tax free. So all the money you pay in to build cash value, all the tax, all the interest that you accrue that keeps compounding, all that is also tax free. All right. So all this is money that is your money. All right. You own this. So with whole life, you have an option down the road. This is where you come in. Say you don't have any kids, all right? You get a whole life insurance policy down the road. You have this money that you have paid in over the years, and that is accruing this compounding interest over the years, over the decades, all right? Now you have all this money at your disposal that's tax free for you to use. All right, you can take this money out of your policy because you own it and you can do whatever you want with it. You like to travel, you think 10, 20 years from now you're still going to want to travel? Of course you will. Of course you will. You can use it for vacations, you can use it for retirement money, you can use it for future investments, lump sum investments. Something pops up that is one of those things that you have to jump on right now, money for that, money to pay off debts, consolidate bills, credit cards, to buy vehicles or put money down on vehicles or whatever you can think of. This money is your money. It benefits you. You can use it whenever you want to, take it out whenever you want to, and you don't have to pay it back unless you want to. All right. So don't fall for the myth. Life insurance does benefit you. It's for you. It's your money as long as you know what to get. So once again, I'm Jay Herring, work with American Income. You got questions, you got myths, I got answers. I'm busting them. Leave me a message in the comments. Let's get your family and your life and your future protected.